Good morning, everybody. And Euro USD, we're still very much bouncing up and down. And I'm just going to highlight one thing here. That is a megaphone formation. It is you can count it a range, to be honest, because it can continue expanding like this forever. A lot of times when you start forming these things on the higher time frames, it goes on for quite some time. And this is it's not really a consolidation, although you can see it as consolidation. In my views, it's more of a confusion. So it's more of like, yeah, we're going up, oh no, we're going down, oh, we're going up, no, we're going down. So it just depends what noise comes through, and that's basically what drives a megaphone. So I want to clear that, and let's just look at the logic. Big up, big down, big up, big down all of last week. But if we look at the weekly bar, you're going to see it actually closed off red. Look at the weekly oscillators here, they are pointing down. Right, we are below the 150 EMA. So when you start looking at all of that, so we drill down to the lower time frames, and you bear in mind that we have the war in the Middle East starting to escalate, which is going to impact the dollar. And then you have the interest rate hikes, so the Feds keep pushing it off, and there were some comments about it only happening next year. Well, the interest rate, the lowering of the interest rates. So, there's more confusion that's just happening here. And then we had non-farm payrolls. I think this was driven by non-farm payrolls, to be quite honest. I think this is really driven by the noise in the Middle East predominantly. So big up, big down. I mean, how on earth do you trade this with confidence as a retail trader? Because these swings are way beyond any retail trader stop. I mean, 1,000-point swing. Anyway, let's just put that top level in as well. I'm just going to do it there. And you can see that rejection was pretty much off nothing. Now, if you drill down to the hour, don't forget to hit the like button. And we have a look here. That just explains it even in plain English to us. And it is confusion. It's big up and big down. So, and it's been going on for so long now. What's the most logical next move? Whenever we group to the downside with the oscillators, we have a big up. Group to the downside of the oscillators, we have a big up. Bit of a flag forming here as well. So I'm very reluctant to be jumping in short here, and I honestly don't see any half decent structure to the upside. That would probably be a better one. It's a daily low here, and that's a double daily low. So that would be the most logical thing, which is 108,131. So guys, I'm still not really interested in this, to be honest. I'm going to want a day or two of breakouts and proper structure before looking for a short or convincing myself that there's a long. There are people that are probably trading this quite successfully and making some half decent money, just trading it as a range. But I'm not a range trader. That's pretty much what it boils down to. So anyway, there should be some. I just want to put one more level in here. So for those of you that are insistent on trying to trade this, there's one more level. My rules would still stay the same, and that is stay below the 150 EMA. You're looking for an opportunity to short. Get back above the 150 EMA, then you're looking for a move all the way back up. Wrong one. All the way back up. Let's just do it there. You can see all the structure here that we broke through and didn't retest. So you'd be looking for a move all the way back up to 108,614. So right now, you can look for rejection of 107,967, 108,131, 108,198. I'm not even sure I'd no, let's take that one out. So if we get above this zone here, then I would expect us to build a base, because that would be above the 150 EMA, and then accelerate to the upside, and then your target area is going to be around 108,614. So that's kind of my view at the moment. Downside targets. Downside targets, where would they be? Let's go to the 3 hour. You can see how the zone that you're looking at, that's previous weekly low. So that's a fairly decent opportunity. And downside targets. That is probably the most logical downside target, and that is going to be 107,544. 107,544. And you're looking for a rejection of 107,967, but ideally if you can get up into this area of 108,131, that would be the ideal rejection area. Okay, that's kind of the only structure that I can see at the moment to the downside, but guys, it can be volatile. You know, the trend is down, there's no doubt about that, but it's a very volatile trend designed to reduce your capital. Anyway, I'm staying out of it. Hope it helps, and we'll catch up with you tomorrow morning. Cheers for now.